Hello everyone, thank you so much for all your questions and comments posted on social media in the last couple of weeks. As you know, starting from this September, once a month we're planning to post a video like this one on YouTube just to address your doubts. And yes, we don't want you to waste your time and days surfing around for this kind of information. Let's start with the first one. Is US Social Security income taxed in Italy? I hear different answers. I bet you do. Social Security is considered a government pension, not a private pension, but it all depends on certain personal features like your dual or your US citizenship only. If your history, your contributions history comes just from the private sector or the public one, or it's a mixed history. It depends if you're moving into certain regions of Italy. So there is no straightforward answer. Generally speaking, so let's say 99.9% of the cases, US Social Security is considered taxable income. The following, another question. Okay, probably you posted several. Can I buy a house as a second property with my Italian husband? So I guess it's a joint partnership, joint ownership. Pay the the amount taxes, and then after receive my citizenship, registered in that comune as prima casa. It will be solely in my name. Okay, in this case, it's all about timing. I'm not a notary, I'm not an immigration lawyer, but I know that once you register for the prima casa, you have a certain period of time in order to settle down as permanent resident. And you, generally speaking, it's about 18 months. So maybe if you can do that, if it's something doable and achievable in your game plan, your time plan, maybe you can already purchase as prima casa and take, let's say, up to 16 months to register there. That's my advice. So you will sign as 2% registry tax, and then of course, save the date on your calendar, and please make sure that you address all the requirements to become permanent residents. So register to the anagrafe and register also to the Agenzia delle Entrate. The following, thanks Paolo, great idea. Thank you, it makes a lot to hear this. Lots of questions. Well, let's see if we can address them all. If you're not at retirement age, so ineligible for the 7% tax initiative, what other beneficial tax schemes are available and how do they work? It's almost impossible for me to give you all this information in this short video, so I kindly invite you to take a look around. There are more than 150 videos about incentives and whatever. So if you're not at retirement age, it all depends if you're still working now or not. If you're not working anymore, I don't see any good benefit for you unless we're talking about, the 100,000 flat, but only if you have a certain, package of assets on your name. Otherwise, if you're retiring for work, if you're waiting for a pension, there are no benefits actually. Flip side, if you're working remotely or for an Italian employer or as a freelancer, it doesn't matter, maybe you can enjoy the regime impatriati, the 70 or the 90% off. The bad thing about that is that still either way you suffer the wealth tax on foreign assets. What are the most tax efficient ways to structure investment assets to optimize Italian wealth taxes? It really depends if you're talking about capital gains or the pure wealth tax, the 0.2% or the 0.76%. There's no best way, because applying the worldwide principle, as much as I would love to give you something that you can apply, you cannot get rid of that. Once you become an Italian tax resident, you pay for the worldwide assets. And in some cases, for example, for real estate, for foreign real estate, you can deduct the taxes, the property taxes, the council taxes already paid there. So very often you don't have to pay any difference for the real estate. But for the investments, generally, yes, you suffer the wealth tax. My suggestion is, if you have to cash out a decent amount of money, do it before becoming tax resident. This is something that happens very often, and I see that works for a lot of expats. Are there any tax efficient investment like ISA in the UK where you are not taxed on gains? I'm gonna disappoint you about this. I'm not Definitely, I'm not an investor advisor. I don't know anything about how to optimize your investing or investments here in Italy, but I can tell you that there are several ways, for example, under the insurance umbrella, that can minimize taxes and minimize gains and minimize the inheritance tax in case you pass away. So take a look around for just the insurance products or insurance investments. Question from Tracy. With my wife's and my retirement's investments, interest, or rental income, if we buy in a 7% flat tax area, we would have to pay about 12,000 a year or 1,000 a month in taxes. Well, almost the same. Is there a way to lower this cost? If I'm correct, do we get to deduct this from our US taxes? That's a very interesting question and a very smart one. For all of you that are brand new to this 7%, basically it's a substitute tax that you pay on your personal income or from foreign sources of income. And instead of the 43 or 23% progressive rates, you pay this flat 7%. The bad news are that you cannot offset, you cannot deduct foreign taxes paid. Flip side, a lot of countries allow you to deduct the 7% against the taxes that you should owe in the other country. So as much as I can tell you that I have many clients doing so, I have many clients that succeeded in offsetting the 7% paid here against the foreign taxes, not just in the US, okay, but worldwide talking. This is something you should ask to a US CPA or a US tax advisor. How long after buying a place in Italy does one have to make it their main residency so as to pay the lower real estate tax? 18 months, based on the current regulations. From Michelina, with a hand, yeah, hi. I have dual citizenship and my investments are all in the US. Where I pay my taxes, if I will reside in Italy, what will my tax situation here? Just to give you some peace of mind, your citizenship does not impact any way on your fiscal situation because we're not talking based on your past. We're not talking about foreign sources of income like, Social Security or something. We're talking about just investments. You will suffer once you become tax resident. You will suffer the wealth tax, the 0.2% on the investment, the 0.76% on real estate, and yes, the 26% on capital gains. You're lucky because there is a tax agreement in force between Italy and the United States. A lot of taxes can be deducted. A lot of taxes, for example, paid in the US can be deducted against the Italian ones. So I have to confirm that you will be required to file your taxes in Italy. I'm not that sure about the tax bill. You should go into deeper details with a good Italian tax guy and a good US one. Deb Marciano is asking, what happens when one is a registered resident in Italy but spend more than 183 days domiciled in the US? Nothing. Okay, don't get me wrong. I don't want to get too easy on this question. Once that you register to the Anagrafe, and your name is listed there in these records for more than 103 days, automatically, based on Article 2 of our tax code, you're considered tax resident. So there's no way you can get rid of that unless you play, and when I say play, I mean you struggle, you manage, you build your case on the Article 4.2 of the tax agreement, and basically it's up to you to prove otherwise, that even though your name is listed there, you're not a tax resident in Italy. But you have to take a good look at the tiebreaker rules, because if you win, you don't owe anything to the Italian Revenue Agency. If you lose, well, penalties are up to 240% of the taxes due, plus up to 3% or 15%, it depends, of your asset. And these are per year. Steve Dello Russo. I love this Italian last name. I'm an American married to an Italian citizen living in the US. We want to move back to Italy. Well, you're more than welcome. But I heard our Roth IRAs, 401k, and other investments will be taxed in Italy. If we do, is it true? And so, how can this be avoided? Okay, before sharing my point of view, please stay away from, people say, oh, this is something that always happens for this kind of investments, or this is something that always apply for this kind of income. Details make the difference. So let's say if you have a retirement plan, I'm not talking about IRA or 401k in particular. If you have a mandatory retirement account, or for example, if you work for any government division, more likely this income and asset will not be taxable here in Italy, unless you get the dual citizenship, for example. So if you have the dual citizenship, we should go into details and see how you build this Roth IRA and the 401k. Because if it's not like a mandatory account, but it's a complementary retirement account that you decided to set up yourself, and by the way, I discourage you to base an important decision. This is just an average overview. More likely you will have to pay the 0.2% on the balance. How can this be avoided? In several ways, but it really depends on the timeline, really depends on your age, really depends on your sources of income, and this is something that I cannot read from your post, so hope you can touch base and give me more details. Silvana, yes, please explain in details. Wow, that's challenging. What is taxed on the 7% tax scheme for retirees, also dual citizens who have pensions, social security, 401k, Roth IRA, savings account, etc. Explain how U.S. bank accounts and dividends are taxed, what it does need to be done in advance, and how to register for the 7% tax program. A lot of questions. I will try to keep it short because probably I could spend up to, I would say, 6 hours talking about the 7%. Tax-wise, you don't have to move a hand to register. However, you have to register to the anagrafe, but this is something more immigration process related. The 7% is a tax haven for someone because potentially you don't have to pay any wealth tax, so you don't have to pay on the 401k statement, you don't have to pay anything on the saving account. However, if you withdraw something from a retirement account, if you receive a pension, on those kind of income, those kind of services, you pay on the gross, okay, listen carefully, on the gross, you pay the 7%. So I thank you once again for this question, because it reminds me that I have to recall a very important thing now. The 7% sounds like a bargain compared to the 23 or 43% you can read aloud. But what happens if using the credit for the taxes paid in the US, you will pay almost nothing here in Italy? Let me try to rephrase it back. The 7% is something that you pay on top of US taxes or the taxes that you paid in the other country. So it's a sum, 7% plus X%. Flip side, if you opt for the regular rates, you will pay the wealth tax, but you can deduct all the personal income taxes already paid in the US. So before registering right away for the 7%, because sounds like a bargain, I invite you to do the math and work on a couple of scenarios. See what happens under the 7% net of any wealth tax, and see what happens on the regular rates net of personal income taxes paid abroad, and of course, dealing with the wealth tax. Another question from Tracy. Is the tax rate the same for an Italian citizen as an expat? I have the ability to get dual citizenship, but it may take 5 to 7 years. I don't have that kind of time. Instead, I will applying for the elective residency visa once I find a place to purchase. Unless we're talking about the 7%, yes, tax rates are the same for everyone and for everywhere. So it doesn't matter if you live in Milan or if you live in the south, it's almost the same. Unless we're talking about a reduced tax basis, but this happens just for regime impatriati. Question from Lisa. Request advice. Wow, how can I give you some advice here without all the context? How to apply for a nomadic worker reduced tax rate for an Italian citizen returning to Italy as well as for the US citizen spouse. How soon do you apply for the special tax rate after arrival in Italy? I will answer this and then I'll read the following. It depends. It depends if you're moving by the first half or the second half of the year. It really depends if you move into another tax year. Let's say you move in 2024. There's no guarantee that in 2024 this benefit will be airing anymore. So I will state on what is current working as a regulation. How soon you have to apply? If you are a freelancer, you have to register right away, because otherwise you cannot move ahead tax-wise. You cannot invoice, you cannot receive money. So I would say as soon as possible. Once that you have your fiscal code, once that you have your permanent resident address. Flip side, if you are a remote worker, there is nothing you have to file prior. It's something that you apply by filing your taxes the following fiscal year. Believe me or not. Request info for the Italian tax rate credits when working remotely for a US company, and US federal and US state taxes are deducted from your paycheck. We're talking about the W-2 in this case, I guess. Does Italy give you a credit for those US taxes automatically deducted from your paycheck? For once, I can say yes, for a simple reason. Because there is a tax agreement in force and you'll never be required to pay twice as much on your personal income. That wouldn't be fair. So they want you to feel, treated like a regular citizen here. So if you already paid something in the other country, you have a credit to use in the Italian tax return. However, and please state this, that if the taxes already paid in the US or withheld in the US are more than the taxes that you should owe in Italy, there's no tax credit given to you like a cash or a check, okay? This is very important. Michele or Michelle, please address inheritance taxation. If I inherit in the States, is it taxed here? Or only if I move it here? I was told 28% by a commercialista. Very good question. Generally speaking, and this is a very complex matter, okay? So I will stay just on the superficial advice. Generally speaking, you pay the inheritance tax here in Italy only if we're talking about assets, money, real estate that are within the Italian territory. If it's outside, you're gonna deal with the foreign legislation. Mario Cicivelli, very Italian last name. We have self-funded pensions in Australia, and being over 60 pay no tax in Australia. I believe if we move to Italy as residents, we are liable to pay at least 30% of our pensions in Italian taxes. We are both dual citizens, Italy and Australia, probably not in a 7% zone residency. As you know, here in Italy, Mario, we go on the progressive rates. So without enough context, I'm not able to tell you which kind of, range, which kind of tax rate you fall into. So I have no idea. I might say that the minimum is 23%. So literally, I have no idea. I can tell you that sooner or later we are releasing a free toolkit that gives you a rough estimate about the taxes due. Plus, there is no evidence if we're talking about, for example, a private retirement account, a public retirement account, a superannuation, whatever. And these things matter when we have to estimate, because first of all, we have to understand what is taxable or not. And then on the gross, we have to do the math. So, as I said before, don't hate me for this, but we need much more details on this. The next question from J. Maccabi. Hi, my question is about capital gains tax. Okay, when I sold my home in the UK, I was already resident in Spain, so I paid the bill in Spain. Now, my only property in Spain is for sale, in order that I can join my Italian wife in Italy. I have read that if I reinvest the entire amount gained in the sale in a UN member state, I will buy a home in Italy, within 2 years, I can avoid paying the capital gain tax. I have retired early at 60. It also states that I must have officially lived in the property for 3 years, which I have. However, since I want to become official resident in Italy, as a spouse of a US citizen, will no longer be officially living in the house when it sells. So does this affect my immunity to pay the capital gain tax, or do I simply need to show that in the recent past I was living in the house for 3 years? The answer will impact on how soon I can enjoy my wife in Italy and start the long process of becoming an Italian citizen. This puts a lot of pressure on me right now, because when you say this will impact how soon I can enjoy my wife, we're not talking about money only. We're talking about feelings and being homesick. So I will be very cautious about giving my advice about this topic. There are some details that are missing, so I will need to speak with you in order to get more information about the case. But I can tell you that if we're talking about something that happens before you become a tax resident, you don't owe anything here in Italy. Flip side, if you purchase the property and you sell it within 5 years, you have to pay the capital gain tax. This is the general rule. So once again, you're more than welcome to drop an email at studiorigo@gmail.com, and we can discuss about it face to face or over Zoom if it was for you, and I can get more details, because I would go from A to Z shooting in the dark. And this, as you just said, can impact on your life in a very huge way. This question comes from, I say, another social media, probably YouTube. So if you apply for residency, say in July 2024, when you file your taxes for the year ending December 31st of 2024, you would owe taxes for the full year to the country you moved from. Then when you pay, okay, well, that depends, because here we have the 183 days rule. Generally speaking, if you spend less than 6 months in Italy, you're not considered tax resident for that given year, unless you apply for certain tax breaks, tax incentives, such as regime impatriati or 7%. So if you move after, let's say, July 3rd of 2024, you may file your taxes for the whole 2024 in another country as permanent resident, and start filing as permanent resident of Italy from January 1st of 2025. And the deadline will take place around, I would say, May, June of 2026. Another question from YouTube. Is it accurate to assume that if I live in and I'm an official tax resident of another country, and then buy a second home in Italy to enjoy each year for less than 103 days, let's say 150 days each year, that I will not be liable for Italian income and capital gain taxes? If there's a possibility that could potentially be cut up in Italian tax net, then what is the magic maximum numbers of days in Italy that will allow me to always avoid being swamped into the Italian tax net? What about the tax case of my home country being a non-tax haven, such as Kitts or Panama? Wow. I'm wondering how long did it take you to write this question, because it's full of very interesting details. I would love to spend a couple of hours discussing about this topic, but I cannot, so I'll try to keep it short and effective. The 103 days is just an assumption. I want to make clear to all of you listening right now. Based on Article 2, if you spend less than 103 days, you're not automatically considered tax resident. If you spend more, you're automatically considered a tax resident until proven otherwise. So, if you spend more than 6 months, it's up to you to prove otherwise that you're not a tax resident. Flip side, if you spend less than 103 days, it's up to the revenue agency to prove that you're a tax resident. Based on what? Well, based on several things. There's no magic number. You can spend in Italy even 1 week, but if the center of your life, the center of your business, and based on the tiebreaker rules, they can prove, I'm thinking about Shakira tax trial, for example, or Valentino Rossi tax trial. If they can prove that everything your life related is in Italy, even though you spend 1 week per year, you will be liable for your taxes here in Italy. Even worse, if you come from a tax haven, because in that case, you're considered tax resident even in a stronger way. The biggest advice that I can tell you is, please take a look about the assumptions. Here in Italy, you're considered tax resident for many reasons. Even though these assumptions do not come from your behaviors, they come just based on the records. If you have one property that is listed at prima casa, you consider a tax resident if you spend more than 6 months. If you're based in a tax haven, you're considered a tax resident in Italy, even though if you spend less than 6 months. So there are a lot of things you have to work on, and it's not just the numbers of days that you spend here. You have to work on a global strategy in Italy and the other country. You have to work on the let's say task list in order to stay away from the Italian tax net. And I don't like, and don't take it personal please, I don't like the word avoid. I would rather say, how can I be compliant with other regulations that will allow me to stay here longer without any liability? Because the goal is not to avoid something or to get into sneaky ways. It's to find the best law that fits your case and gives you the permission based on the records, not just based on the assumptions, based on the records, based on the regulations, that give you the freedom to do what you want. But of course, sooner or later, you have to decide where you want to pay your taxes. So as it counts for others, my invite for you is to drop a message and we can have a private consultation or a private call about this. Questions are over, so hope you found this session useful enough to learn the basics of the Italian taxes. And as you can see, every case is different. If you have more questions, please comment below and keep an eye on social media. In the following weeks, we are offering this opportunity every month. See you in the next video.